10-year note yields closed out the session going lower. Today trading down to 435 and closing down 8 basis points. After previously, earlier in the week, we traded as high as 449. So a 14 basis point reversal in only a couple of sessions. A lot of that having to do today with a weaker ADP number, as well as a much weaker ISM Services Index number that came out, both fueling those rate cut odds, which are now at 80% for the first rate cut at September FOMC. But again, seeing yields move lower midweek, closing out at 435 today. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will see that volatility's remained relatively steady. We have seen it nudge higher this week as a lot of uncertainty about rates, a lot of uncertainty geopolitically, a lot going on right now. And we're seeing volatility edge higher despite the fact that yields are moving lower. Again, seeing vol creep higher today, higher from Friday's close last week and higher from yesterday's close as well. Lastly, let's talk about what we have later this week. Tomorrow's Thursday, we have the July 4th holiday. And then on Friday, we have the employment report, which obviously is integral in the Fed's decision whether or not they're going to be cutting rates in September or any time in the near future. Recently, we heard from the Fed chair. He talked about higher for longer, again, saying that they've made progress against inflation, but there's still work to be done. However, the market is leaning towards that first cut at September FOMC. The employment report could be a linchpin there. It'd be very interesting to see what happens if it comes in stronger or weaker than expected. So midweek, we see 10-year note treasury yields moving lower back to 435 ahead of Friday's all-important employment report.